Hello and welcome back. Previously, I told you that there are two types of taxes which we have to pay. One is called a normal tax, which you know what it is because we are studying income tax. Other sort of tax was called national insurance, if you remember. Now, national insurance, if you are living in the UK, you know what national insurance contribution is and what national insurance is. If you're working or if you're not working still, you know what NI is. If you're not working or not living in the UK, then you might think what national insurance is. It is simply another type of tax which you have to pay on top of what you pay for normal tax. So one is normal tax, another is national insurance. So there are two types of taxes. Today we are going to discuss the national insurance. Now, why does government need national insurance? The amount received in shape of national insurance by HMRC is then spent on different peoples in shape of benefits. There could be different benefits like employment benefits, job seekers allowance, disability benefits, and lots of other benefits as well. So the government of UK cares for the people who are not working, so they give them some benefits. They give child benefits. They give employment allowance or job seekers allowance. They give housing allowance. If you don't have a house, the government gives you a house as well in the UK. So there are lots and lots of expenses. Likewise, if you are disabled, God forbid, if you are disabled and you cannot move, then government gives you some benefit as well to look after yourself and to pay for someone who is looking after you. All right. So that's how the government receives benefits. Government receives national insurance and then spends on different peoples doing different things. All right. So that's where the national insurance comes. Now I will look at the national insurance from the notes, and I will share the screen with you as well. If you could please, if you've downloaded the notes, please come to your notes as well. Or if you want to check from the screen, I will just share the screen with you. Give me 1 second. That is chapter 3 of lecture notes, and if you please move to page 17 of lecture notes. Now, page 17 of lecture notes, it says national insurance contribution. National insurance contribution is a tax which you have to pay on your income. Now, there are different types of national insurances, national insurance contributions, some of which is paid by employee who is working for a company, like myself. I'm working for AccountancyTube, so there is a type of tax, there is a type of NI which I will pay on my salary. There is another type of NI as well, which is paid by AccountancyTube because he's my employer, they are my employer. So they will pay employer's contribution, I will pay employee's contribution. There is other NI as well, which is paid by businesses. So say for example, if a business is working, and and they will have to pay on their own profits. Say for example, assuming AccountancyTube is a profit making, which isn't, but assuming if AccountancyTube is a profit-making organization, then whatever profits they make, they will have to pay tax on that. All right. So there are different types of NIs. So we'll see in details now. First of all, is called in the table. If you see, it says class 1 NI. Now, class 1. There are two types of class 1s: class 1 primary and class 1 secondary. Now, class 1 primary is for employee, myself. Class 1 employer, it is secondary one, it is paid by AccountancyTube. Alright, so class 1 primary, how much I have to pay? From £1 to 8,060 per year, I don't have to pay nothing. So if I am earning up to 8,060 per year, although I am earning more than that, so if I am earning up to 8,060 per year, I will not have to pay any tax as far as NI is concerned. I will not have to pay any NI if I'm earning up to 8060 per year. After that, it says 8061 from 8061 to 42,375. So from between this limit, the tax rate, the NI rate is 12%. Then above that is a 2% rate. So say for example, if your earning is £30,000 a year, and your salary is £30,000 a year, then what you will have to do is 30,000 less 8,060, because 8,060 is exempt anyway. So 30,000 less 8,060, whatever it is, you will have to pay NI at the rate of 12%. say for example, if your earning is £50,000 a year, then what you'll have to do is you'll have to deduct 42,375 less 8,061. That bit will be taxed at the rate of 12%, and 50,000 less 42,385, whatever the remaining one is, it will be taxed at the rate of 2%. Now we're talking about the employee perspective. Next one is a class 1 employer, which will be paid by the boss, by the company for which you are working. So this is a employer class 1 NI, or secondary class 1 NI. Now from £1 to 8,012 is nothing. Then from 8,013 to above that, it is 13.5%. Now as far as these rates are concerned, this table will be given to you in the exam. I think there is a mistake in some of these tables, because I'm not sure, but I think there is a mistake in the table. You will have to check the tax tables. Tax tables are given to you in the exam, and tax tables are also given to you in the practice and revision kit. If you go to the end of the practice and revision kit of BPP, you will find the tax table which will be given to you in the exam. So whatever I am telling you, I'm just telling you the rules. Don't stick yourself according to this table, because this table will be given to you in the exam anyway. Alright? So we're talking about the employer then. From £1 to 8,012 is nil. Then from 8,013 and above is 13.5%. So it is standard rate. For example, if a company for which only one employee is working, or only a couple of employees are working, and their salary they are paying is very less, say for example £1,800, then they will not have to pay employer contribution. Why? See beneath that, employment allowance of £2,000. Alright, so for example, if this company called AccountancyTube has got only 3 employees and all of them are paid £500 a month, £500 a year, then they will not have to pay any employer class 1 NI. Alright? For example, if their salaries are £10,000, then whatever £10,000 is, will have to deduct employment allowance of £2,000. Whatever the remaining one is, you will have to pay tax on that. So employment allowance of £2,000, as far as employer NI is concerned, it will always be given. Now this employment allowance 2,000 you will always have to deduct when you are calculating the employer NI. Then comes the class 1A. Class 1A, what is it? Class 1A is paid on benefits. The sort of benefits which you get. Say for example, you get the car, you get the scholarships, you get lots and lots of benefits from your employer. You could have accommodation or anything else. So the benefits which you're getting from your employer, employer will have to pay the class 1A NI. So employer will have to pay on the benefits. Right? And it is at the standard rate of 13.5%. There isn't any exemption. Now then comes the class 2. Now class 2 is a standard rate of £2.80 per week. £2.80 per week. Whatever the duration of your employment is, you will have to multiply the weeks to the 2.80 and exempt if exempt if accounting profit no more than 5,965 or receive state pension. Now say for example, if your profits are 5,965 or less than that, then you will not have to pay any class 2 tax. But who will pay this class 2? Will employer pay or employee pay? No, it is not for employment, it is for self-employment. So for self-employed, if say for example, if you are self-employed and you're working for someone but you are self-employed, we'll look at the difference between self-employed and employed in details. But self-employed is someone who is not working for someone, he has got her own business, right? So if you are self-employed, then you will have to pay class 2 national insurance, and 280 per week is the rate. And if your earning is 5,965 or less than that, then you will not get any, you will not have to pay anything in class 2, or if you are getting the state pension. Then comes the class 4 NI. Now the class 4 NI is paid on the annual taxable profits, right? Now only on the taxable profits. Class 4. So So class 4 is paid only on the taxable profits. Say for example, I gave you the earlier example, if AccountancyTube assuming that they are a profit making organization, then they will have to pay class 4 tax, class 4 NI, alright, and they will have to pay on annual profits. What is the rate? Up to 1,000, up to 8,060 there is nothing. It's from 8,060 to 42,385 is 9%, and above that is 2%. So these are different types of NIs that you will have to pay. Beneath that, it gives you the details of all the employee and employer and all the NIs. As far as, excuse me, class 1 is concerned, it is paid on salary, bonus and excess mileage allowance received from employer. Then it says the employer, it's paid on salary, bonus and excess mileage allowance to be paid in 15-16. Employer can claim £2,000 per annum relief from the total class 1 NIC payments. And then it says class 1, it is paid on the benefits of employee to be paid by employer. Then it says on class 2 to be paid by self-employed, class 4 to be paid by self-employed on taxable annual profits of taxable annual profit. So if you're a self-employed, or if you're a sole trade business, then you will have to pay class 4 NI on taxable profits. All right. After that, it says the comprehensive example. We haven't moved till there yet. We just looked at the national insurance contribution bit of it. Now, if you please go back, and I'm going back with you as well on the screen. If you see at the start of the chapter 4. On page 11, please. If you've downloaded the notes, please make sure you are on the page 11. It says employment income. Now our next topic here is employment income. Now topic which we are going to discuss is employment income. It is one component. If you remember, I made the table income tax pro forma, non-savings, savings and dividends. Now all the bits and pieces which I wrote here, if you remember, I told you that these are called components of income. So one of the component of income is called employment income. So we will do now employment income. It is a lengthy topic area. We will do all the treatments with employment income. Whatever our final figure is going to be, we're going to put this figure in our income tax pro forma as employment income. And you know where employment income goes into non-savings income, right? So let's start then. Now when I am working, employment income is simply income which I earn from my employment. If I'm working for a company, they pay me salary. So that's what it's called employment income, because I am under my employment. Now apart from salary, they could give me some other benefits as well. They could give me some bonus if I performed well, or if company is overall performing well. So the companies normally pay bonuses if their employees are working very hard, or if company overall is working very hard. All right. So they could give me some bonus. Then they could give me benefits as well. So benefits could be, it could be many sorts of. It could be a car, it could be accommodation, it could be scholarship, it could be a holiday trip to somewhere in Spain. So it could be very, very, it is broad range of benefits employee can give. So we need to calculate our employment income. How can we calculate? We need to see that. First of all, we need to take the salary. So first of all, we'll take the salary. So salary, you know what salary is. Salary is simply the amount which I get from my employer, and most people in the world, it is very, very common word. All right. So salary is an amount which is paid by employer. It is money which is paid by employer. I need to add benefits into it. So benefits, I told you there could be many sorts of benefits. Then I need to also add salary, benefits, and I need to, hang on, I will write down the thing here. I just forgot. So salary, benefits, then I need to deduct out of this whatever employee has paid for the salary. Paid for the benefits. Employee paid for salary. All right. So if employee has paid something towards their benefits, then we will have to deduct this here. The other thing which I can receive, it just came into my mind. It was bonus. I just forgot. It just gone blank in my mind. So another thing bonus could also be paid. All right. So one thing could be salary, other thing could be benefit, and it could also be a bonus. All right. Now what we need to deduct out of this is employee paid for salary. Not for salary. Something called benefits. Employee paid for benefits. So if employee has paid something towards the benefit, so benefit could be some car. Say for example, if I went to market and I liked a BMW and I was going to buy that, then I discussed it with my boss. Boss, I like that new BMW series, so I'm going to buy that one. My boss just said, really, do you like that car? I said, yeah. My boss said, all right, okay. I was planning to give you a car at end of the year, but that is a cheap car. So how much is the car which you are looking for, BMW? I said, it is 15 grand. All right, it is 15,000 pounds. I was contributing only 5,000 pounds. So I was only going to give you a Toyota Yaris. So then I said, all right, okay. Then my boss said, all right, okay, I will give you 5,000 pounds and go ahead and buy your car which you like. So that is what is called employee paid for benefit. Now the BMW which I'm going to buy from the market, although I am buying for myself, but who is paying for it? My boss is paying for it. My boss is paying for it, but I am contributing something into it. All right. So that is what it is called employee paid for benefits, or employee's contribution towards benefit. So my company paid me a car, BMW, but I contributed 10,000 into it to buy the car. All right. So that's what it's called employee paid for benefits. We'll have to deduct that one out of this. All right. So we take the salary and then we add the benefits into it, and then we add the bonus as well, which we have received, which is paid by our company, and then we deduct the whatever employee has paid for the benefits. Say for example, I give you the example of car. Now there could be other deductions as well, which we can deduct from here. There could be many sorts of deductions. Say for example, if you're going to pay your membership fee of your ACCA membership, then you will have to deduct that one out of here as well. But there could be many sort of deductions. We will see later what the deductions are. All right. So salary, benefits, bonus, and then we need to deduct these two out of this one. Please check on your notes now. First one is called salary, then bonus and benefits are added into it, and then amount paid by employee for benefits and allowable deductions are taken off these things. Now in the bonus it says the amount, it is not amount, it is amount. The amount of bonus is taxed in the tax year in which the employee becomes entitled. Now next it's the benefit, list of benefits. It is a huge list of benefits. Some of them are very important as far as exam is concerned. Others are less important, and others are no important at all. You don't even need to, read it again and again. So you just read it and just go through it, just overlook it. All right. So there are lots and lots of benefits. As I said, some of them are very important, others are less important. First one is called vouchers. The employer can give you some vouchers. It could be Tesco, Asda, or it could be any other vouchers. It could be fuel voucher. It could be voucher of BHS or something else. Employer can give you a voucher to go into market and buy something. It could be credit cards as well. So these are whatever employer is giving you, whatever does it cost employer, it will be your tax benefits. All kinds of vouchers, blah blah blah, provided to employee are taxable on the cost to employer, as I said. Then it says accommodation. Now accommodation provided by employer could be of three sorts. Now if a security guard has to look after a building and he's staying there for night, now can he go out of that building and sleep at home? No, he can't, because he has to look after the building. Now while he is looking after the building, it is part of his job to stay there, to sleep there, to eat there, because it is required by his profession, it is required by his job. If he does not stay there, his job is meaningless, because he's guarding the building, right? So if accommodation provided by employer to employee is job related, it is required by the job. In this case of security guard, if it is required by the job, then it will be exempt benefit, whatever the amount of accommodation is. Say for example, if a company paying some amount to the building where the security guard is living. So whatever the rent employer is paying, it is exempt benefit as far as employee is concerned, as far as security guard is concerned. All right. So whatever employer is giving in sort of rents, it will be exempt benefit as far as if the accommodation is job related. All right. Now the next one is if the accommodation is less than £75,000. Now if you see, I told you the exempt one. Now please check the case 3. As I said, the accommodation could be of 3 sorts. Please check the case 3 where it says accommodation provided is job related. It is exempt. Now please come to case 1 where it says a cost of accommodation provided to employee is more than £75,000. Please make sure you write it down as less than. Please make sure you write it down as less than £75,000. It is not more than. All right. Less than £75,000. Then it says a taxable amount is calculated as annual amount and B is rent paid by employer. So it is higher of these two. Please make sure you write down that as well. Higher of annual value which will be given to you in the exam, and if employer is paying anything into to the rent, as a rent, then higher of these two. So if the accommodation is less than £75,000, what if the accommodation is expensive one and it is more than £75,000? Then what you will have to do is you will have to take annual value and add something into it. What something? Let's see there. Take the annual value and add. Take cost of accommodation or market value less £75,000, which is our threshold, multiplied by official rate of interest. Official rate of interest as far as P6 and P6 and F6 is concerned, official rate of interest is 3%, and it will be given to you in the exam as well. All right, only the official rate of interest. So cost of accommodation or market value less £75,000 into 3%. Say for example, if the accommodation is £100,000, its value is £100,000 and the annual value is £1,000. So £1,000 plus 100,000 less 75,000 into how much? 3%, you're right. All right. So that's the way to calculate it. And the third case, we already know it. Then it says expenses connected with the living accommodation. If the accommodation is provided, although the accommodation is provided, but there could be other expenses as well. Say electricity, there could be gas, there could be telephone bills, council tax, there could be many other expenses. So what about that? They all will be taxable, whatever it costs to your employer. All right. So then it says expenses connected with living accommodation is heating, lighting, gardening bill, repairing, decoration, all paid by employer is taxable. Expenses reimbursed by employer when employee is away from home. Say for example, if you're required to go to an audit from London to Manchester, or from tax purposes or for your accountancy practice purposes, then if you're going from London to Manchester, then only if employer gives you something per day allowance to buy the food or something else, then if employer is giving you £5 per day, then it is exempt. If employer is giving you more than £5, then whole amount will be taxable. That's what it says here. Expenses reimbursed by employer when employee is away from home. You are away from home. You are going from London to Manchester in the same country. £5 per day in UK is exempt. If exceeds the whole amount is taxable. £10 per day in the is exempt. If exceeds the whole amount is taxable. Now in the second one it says £10 per day outside UK. If you're going from UK to Dubai for audit purposes, then £10 per day is exempt, and if it exceeds the whole amount is going to be taxable. The next one is scholarships. The employer could give you a scholarship, or your child or your wife. So if the employer is giving you some scholarships, then it will be a taxable benefit to employee. Next one is called removal expense. Please make sure you write down, this is important, and the fourth one was important as well. Now the removal expenses are if you are required to move your house from one place to another. If you are moving from London to Manchester, if your office has been moved from London to Manchester, then you might well think that I shall move from London to Manchester as well. Now you will have to take all of your house stuff up there in the new house, so it will cost something. So these are called removal expenses. Now if the employer has given you £8,000, then 8,000 is exempt, excess is taxable. Say for example, it cost you, employer give you £15,000, and so only £8,000 of it will be exempt, and £7,000 will be taxable. Right? That is called removable expenses. Next one is a medical insurance. Now, if employee is outside UK for performance of duty, then exempt. If it is outside UK, then it is exempt. If it is in the UK, then taxable cost to the employer. So if you are went from UK to Dubai, then if you are away, then it will be exempt, and if you are in the UK for the performance of the duties, then it is going to be taxable. All right. So these were some of the benefits. Now there are further as well. There are some other benefits of cars and other lots and lots of stuff. But please, we will look at the more of the benefits later. But if you could please come to page 16, please. Page 16. It says allowable deductions. Now in this formula, if you look, we looked at what salaries. We know it. We looked at some of the benefits. We haven't seen all of them yet. We know what bonus is. Now we are going to, and we know employee paid for benefits. We know what it is. Now we're looking at the deductions, allowable deductions. Right? So what are allowable deductions that we can deduct out of these? Now this is the list of allowable deduction. The following expenses are paid by employee himself, then it can deduct from the salary as allowable deductions. Now these are all of the list of expenses which can be deducted. First is contribution to occupational pension scheme, subscription paid to professional bodies. It could be ACCA, CIMA or ICAW, etc. Payment to charity made under payroll deduction scheme. If you are looking to pay to some charities, then it will also be allowable deduction. So then it says payment for liability incurred due to his employment. Say for example, if you were going to do an audit and you breached some sort of law, or you breached some sort of law while doing audit or some tax consultancy, then if you have done some penalty, if you have incurred some penalty, then it will be you'll have to pay that penalty, and if you paid that penalty, that will be also an allowable deduction. So then it says the payment of premium for insurance to cover the liability to be incurred due to his employment. Now the insurance premium which you pay, say for example your professional insurance, it could be there are different types of insurances from your audit. All right. And now whatever your premium you pay for your employment purposes, that will be also deductible. All right. Then it says payment. Then it says approved mileage allowance. Now the approved mileage allowance we'll see later. For details, see employment benefits. We'll see later what approved mileage allowance is, but it is also a deductible expense. Then it says qualifying travel expenses. If there are some travel expenses, and if they are qualifying, then it will be expenses and it will be deducted as well. All right, we will see later what qualifying travel expenses are, but for now you can say it is just a fuel. Then it says travel expense for travel between home and normal place of work. Say for example, if you're working in London and if you're going from London office to your home, all right, travel expenses from travel between home and normal place of work, normal commuting cost is not deductible. So you're going from home to office, this bit is your normal routine. You will have to go from your office to your normal you will have to go from your home to normal office every day. So if you are incurring any fuel for this bit, it is not deductible. However, it says travel expense for travel between normal place of work and the temporary place of work. So for example, if your employer is saying that please go to that office in another part of the London, then what happens? The travel expenses between normal place of work and temporary place of work. So you are going from normal place of work to a temporary place of work, from this office to that office, then it will be deductible. Then in the third one it says travel expenses for travel between home and temporary place of work is deductible if it is not more than 24 months. Now you are going from home to this normally. Instead of going here, you are going directly to your normal place, your temporary place of work. Now it is deductible if it is less than 24 months. If you are going for 2 years and then after continued going there, then it will not be deductible, but only for 24 months. All right. Now underneath that, in the small, where the small arrows are, I showed you how to remember it. Now from home to normal place of work, and then it says from home to normal place of work, it shows you the cross, it is not deductible. Then from normal place of work to a temporary place of work, it is deductible. Then from home to temporary place of work, only if less than 24 months. All right. Then number 8 says cost of business telephone calls and private telephone is deductible. So cost of business telephone calls, if I use my mobile phone to do business calls, then it is deductible. But no part of the line rent can be deducted. So if there is any fixed cost, it won't be any deductible, because you will be using your phone for your home, for your personal purposes, more than what you are using it for your business purposes. All right, of course you know that. Then the next one, it says appropriate portion of cost on heating, lighting and council tax incurred by employee while working partly or wholly at home. Say for example, if your boss has given you an assignment, it is your job part, and he said that just do it at home, you can do it from home as well. Then you went home and then you use your laptop, you use your lighting, electricity, heating. So that sort of expenses you will have to consider. You will have to calculate how much is it related to your job. It is a difficult job, so then that part is also deductible. So you might be started to think, who will do that complex things. You can just say, I have spent £100. It is related to job. No one is going to look at that. But please make sure you tell truth to HMRC. Everybody does. If you're not, then HMRC guys, HMRC officers will be after you, and then because they are more clever than we are. So please make sure that you do not mess with them. Then in the notes it says if the above mentioned expenses are paid by employer, then it will be exempt benefit for the employee. Now, whichever we have discussed so far, the above expenses, if the employee is paying, it will be deducted out of the salary, like here. All right. If employer has paid these expenses, then it will be an exempt benefit. You will not be considered paying it. You will not have to pay it. All right. Now that's it for today, I think, and I will see you in the next lecture with more benefits, because we haven't covered the benefits, all of the benefits yet. We'll have to see cars, we'll have to see other benefits as well. All right. So I will see you in the next lecture with more benefits of employment income. Thank you very much and goodbye.